I'm Alan Kinney, Editorial Director with REIT.com, and we're in San Francisco for REITWorld 2013. Joining me is Patrick Scholes, Equity Research Analyst with Suntrust Robinson Humphrey. Patrick, the hotel sector has been a really strong performer in 2013. Are we going to see that continue next year?
I believe we are, and the reason is we've started to see a nice pickup in group trends for next year. And I think that's going to give an extra leg or oomph to RevPAR for next year, where we could see it 6, possibly 7%. And certainly that's going to allow for some nice margin growth for these companies, and it'll keep investor interest certainly in the sector.
What about supply? Do you see that picking up? And also pricing, do you think that we'll see any kind of wiggle room there?
Well, as far as supply next year, not concerned about it. Pretty much through a lot of the data surveys that we do, supply is roughly 1, maybe 1.5% for the industry at average next year. There's certainly going to be markets where it's a concern. New York, I think you're going to see 6 to 7% supply growth for next year. It will make that a market that will be a challenge to outperform, though the positive for New York are the demand trends, especially from the international travelers, are quite strong. So it should help offset some of that supply growth. Other markets where you do have some supply, I think a market's going to be concerned is going to be Washington, D.C. You have 2 to 3% supply growth coming on, and certainly, as we know, demand trends in Washington, D.C., government-related, have been I think an understatement would be said, less than spectacular. And then lastly, the third market where you're going to have some supply, or seeing supply today, is going to be in Nashville. Fortunately, Nashville is a market that has a lot of demand. Demand has really been on fire in Nashville, so I think that will certainly, demand will outpace the supply for that market. But for overall, for the whole industry, most markets are seeing less than 1% for next year.
And so is the growth going to come more from the individual travelers, families, or group business?
Well, the growth will still primarily be driven by individual business travelers. As a matter of fact, what's quite interesting for the next couple months, as we see in our demand checks, that we see actually leisure travel leading the way for the moment, at least through February and March, followed by individual business traveler. But what's going to really help is the pickup in demand, and what that causes is something called compression, essentially lack of last room availability, where if you're the hotel company, it's great, you can really jack up your prices. If you're the traveler, not so great, but we're looking at this from the hotel side, and certainly having a better base of group demand helps with your revenue and your yield management, where you can price more accordingly for the last minute booker, because you have a better idea of how full your hotel is to start with.
All right, Patrick, thank you so much for
Thank
your
you.
time. And for more on this and other REIT news and analysis, be sure to check out REIT.com.